The skills shortage crisis is back in focus. The impact of floods, fires and cyclones significantly now increasing demand for labour. According to the Clarius Skills Index, the skills shortage reprieve's been short-lived, with demand for skilled workforce now already above what's normally experienced in the early part of the year. Now let's get more with Kim Quick from Clarius in our Melbourne studio. So I guess now optimism aplenty, but how do we match it with what you're saying is looking like a shortage?
Yeah, look, it's, the data for the last quarter is very interesting in terms of the raw numbers would indicate that there was a softening in the skills shortage, but the numbers have been softened a little bit by an increase in participation in the workforce. So that's helped ease the shortage in some areas. However, the events of the last month obviously put more pressure on an area in the skills market where there's already significant pressure, and that is in trades-related and building-related sectors.
So, yeah, Kim, given this is the December quarter skills index, how much of this data encaptures what's gone on with the flooding and now cyclone and bushfires then?
Yeah, look, things change very quickly, obviously. And look, certainly when we measured the skills shortage during this period, we felt that that was a reasonable reflection of what was happening in the marketplace. Now, obviously, a couple of things have happened in the last month. Firstly, as I said, there's increased pressure in some areas for certain types of skills and areas that are already experiencing shortages. But a little bit of a softening in confidence, I think, is going to start to have an impact on some of those non-construction related trades. And we're already starting to see on the rock face a little bit of softening in confidence in the business community.
You talk about the need for TAFEs and other institutions to reconfigure courses to respond in these times to specific skills and labour demands. Can you identify the sectors? Because your baseline is for a balanced market is 100, right, across different skills.
Yes, that's right, yes. Basically, 100 tells us that supply and demand equal. However, there's another dynamic that sort of underlies that raw number, and you'll see unders and overs throughout every skill category.
So where would you like to see institutions really zoning in on and maybe just quickly showing that nimbleness around courses? Yeah.
Well, look, the main thing, and we've been talking about this for some time, is really around those trades apprenticeship types programs. I know there has been some improvement in that area, but I'm sure it's not lost on many people today that, the Victorian bushfires were 2 years ago, and there's still people waiting for housing and still having trouble finding the labour to actually complete some of the projects. And obviously what's happened in the last, 3 weeks is really going to make that even more severe. So any action that's taken place in there hasn't been quick enough, and it hasn't been dramatic enough. Very hard to foresee these sorts of events, but I think there still is a window of opportunity to be able to really ramp up activity in that sector and really try and make sure that as many trades-related people are coming into the marketplace as possible to try and meet the demand that's obviously going to be just getting bigger and bigger every day.
Kim, we were chatting earlier with Bob Olivier as well from Advantage, and they put out an index, and he was saying that from a recruitment perspective there were some changes in 2007 to business migration practices, and he said in a lot of instances it's impossible to fill spots for clients with overseas workers and skilled workers because of the hoops that you've got to jump through, and all the paperwork makes it just disastrous. To what extent can some of the elements of that be changed, or are you calling for changes in order to kind of fill this skills shortages into the future?
Yeah, look, again, we've been saying this for the last couple of years since we've been preparing the index with the view that this was going to happen at some point. The government's made it very, very difficult for organisations in the recruitment sector, who are probably the largest providers of visa contractors and employees, to really get people into the country and on hire them. So we're very restricted in terms of we can bring people in from overseas to employ ourselves, but we can't put them into contract roles or place them into permanent positions with clients without having to go through a fairly onerous process, which in a lot of instances, particularly for those trade-related areas, it's sometimes it doesn't warrant the sort of effort that companies need to go through to actually get that outcome. So there really just needs to be an easing of the process in terms of allowing more organisations to bring in more sponsored employees. Are
you making any headway, though? You just said you've been at this for some time. Is the government listening?
Well, just when you think maybe something happens that changes that. But look, we've seen nothing to suggest that there is going to be any easing whatsoever in the short term.
Really interesting link. I know we're against it on this one, but you talked about optimism coming in December with employees going into the market. That was just a month after a rate rise. Are you surprised that there was that they were still buoyed up?
Look, not really. I think what the skill shortage has done to the marketplace is provide a lot more flexibility for people coming into the employment market. I think all the talk of the last few years about the workforce dynamic changing has meant people who couldn't perhaps come into a traditional role have been able to get that flexibility or part-time hours, or being given the opportunity to be trained up into a particular skill set has actually increased. So I think it...
No, I didn't want to override you on that because I know that we're about to wrap it, but just here's another thing that came in light with that. This hour we've been talking about the performance of construction index. That sector is sharply contracting, but we've got a skill shortage in building and engineering workers. What's going on, Kim?
Yeah, look, again, I think the marketplace is really unpredictable at the moment. So, as quickly, and I think Brooke asked the question about how current is data. Data actually isn't that current these days, and as quickly as you see a trend going one way, it can turn the other way, which I think really lends itself to how susceptible our market still is to natural forces, outside forces, and those types of things. But really where the need is that we talk about is that hands-on, actual trades related, not necessarily the architects or the engineers or the designers, the actual hands-on trades-related aspect.
Kim Quick from Clarius, as always, great to have your company.
Thank you very much.
Thank you so much. Brooke, we're opening up in just a moment, so what's going to dominate?
Key stock to look at the day ahead. Myer, it's up about 6.5% since the start of the year, last on $3.75. Watch it at the open today. It's cut its full-year profit forecast. Bernie Brooks has talked of the fragile consumer confidence that they're noticing. He says that's a trend that's going to continue. And this tendency of consumers to save as well obviously doesn't bode well for some of the retailers trying to get people in the door and getting them to spend their hard-earned cash. So that's a key one to look at in the day ahead.
And AGL as well out today, cutting its full-year profit forecast down by 8%, and it's blaming Mother Nature as well. Those floods on the eastern seaboard, in particular, full-year underlying profit now between $415 million and $440 million. So the optimism's come out of the market. The SPY actually turning negative in the last couple of moments on the reset, down 0.1%. Wherever you're trading, whatever you're buying, do have a good one. Thanks, Brooke. Have a good day.
See you soon.